Parag bhai, saw a note on Voltas by Jefferies. It's maintained a buy with a target price of 1,990. Is referring to a management commentary about the supply of compressors and saying that there's adequate supply unless demand surges 60+% year on year, which is unlikely, one would assume. It's already terribly hot. I'm just wondering what your view is, not just necessarily on Voltas, but on the space.
So basically, we have also taken that call that summer is going to be very hot, and so we have bought Bluestar, which we feel has demonstrated fantastic market share gain with margin expansion in last 3-4 years. So we bought Bluestar in the last fall, although we could buy very little, and we have got some Crompton in this space, in the consumer durable space.
But what's the thesis? I'm curious, because Voltas seemingly wants to prefer the mass market space. As an investor, which would you say is the better approach to have?
No, I would say that you can buy in this kind of dips in this space, because as you rightly said, these companies are very good, balance sheets are fantastic, return ratios are very good, and you have to see this company on a year-on-year basis, right? You cannot apply trailing PE thesis over here, because every summer will be different, and every year it will be different for the sector. So I would say that I like this space. As such, government steps in budget was also positive for this space in my view, by increasing the tax slab. So giving more tax relief, putting more money in the hands of consumers, and consumer discretionary is the space where this money can go, and this consumer, and the summer is hot, so everything is combining. So I would say that I'll be constructive on the sector. I'm a little bit worried about the valuations in the sector, but that's why I said that I have a little position in Bluestar and Crompton in my portfolios, which is bought in this correction.
Also, I think the dispatches of the sales in 2024 were very, very strong. So they will also have a base effect impact in the second half of the year too. So bear that in mind. But one more stock that's doing really well is HBL Engineering. I think you pointed it out.
Yes.
And that stock is up some 7-8%. Lot of order wins in the last 4 or 5 months. So suddenly Kavach orders went dry in the second half of 2024. They've come back with a bang for a lot of companies maybe, but for HBL Engine for sure. And that stock is really revving up. I wonder if you have a fundamental thought on this one,
no.
or the Kavach orders per se, not per se.
No, but I was, to be very frank, I was also surprised with the defense comeback. Because when government announced budget, the tilt was clearly towards boosting consumption. And so, at least I thought that, and I am very frank here, that I thought that now we have to focus more on consumption theme. But as it is playing out in HAL or this HBL Engine, whatever you are saying, that defense orders have taken have seen a big comeback. So I would acknowledge that. Because see, what happens is when we focus on government's capex number in a particular budget, that actually overshadows the entire thing. That government's focus is there.
The details.
And plus, for example, the 62,000 crore order will get executed from 3rd year till 8th year.
Yeah.
So government capex number will not capture that huge
Those
focus of the
details.
government. So that's a learning for me also.